Hello guys. So as usual, I have changed the time for the live streaming from Saturday night to Friday night just to see if we have more people on Friday night than Saturday night. So I would never know, so I should try. And this is the Labor Day weekend, so I want to do it before because maybe people are traveling or having a weekend with their friends. So I want just to be ahead of all these things. So I will be just waiting for a few minutes, and then we can start our live. And as usual, we have always questions, trading questions, investing questions, and we try to discuss all these things. And each week we have a new questions, a new stocks to discuss, the market in general, and a lot of stuff. Okay, so we are just beginning to see if some people are coming, and then when we have enough people, we begin our questions and answers. As usual, we always wait for a few minutes, and then we can begin. And hope most of the time people come one at once. And okay, let's see here. Okay, okay, that's good. Okay, so I see my friends haven't come yet, so we just begin speaking about the market. As you can see, all these 3 or 4 weeks, when you see the trend begin. Hello VJK, how are you? When we see that this, our stock market begin to move from the bottom for 3 or 4 weeks, I will explain later and will show you the chart. And I told you last week and the other week and the other week that there is a move. If we continue this move, maybe we get rid of this correction, because we are near to finish it, if possible. All the sectors, industries are most of them are going up, and this I have shown in my subscription, in golden subscription and silver subscription, and I showed that, and I give examples, and we discussed that with our subscribers and the information. So it's always good to know where is the money. That is the main question you can ask by searching. Okay, you will never know. If you see that even the Dow Jones, for example, as an index which has 30 stocks. Now this Dow Jones is just a global, it's just a US index that summarizes the whole market, because all these big stocks that are in the Dow Jones, they are so big and they belong to many sectors. Okay, and these sectors, it's very easy to see which one is good, which one is bad. And I have made a lot of examples before, and in my subscription we try to speak about ETFs. Okay, and I show a lot of stuff like this. how things work in the market. Now, I proposed ETFs for a lot of people who are who don't like to buy a lot and to sell a lot. So this is a good idea for them. Either if the stock market is going up or it's going down, you can do that. Okay, you can do that. It means you can instead of buying a company stock, you can buy an index. You can buy like an industry. You can buy a sector or part of the sector. There are hundreds and thousands of ETFs. So even with the same sector, there are a lot of companies that they make these ETFs, and for some people, they don't know which is which. That's why all the people who are in my golden subscription, they get more of this information, and I just give them examples and how to find them, and then they do by themselves, because the market is a lot. I can't just go and deal with the whole market. There are thousands of ETFs, and they are not on the same level. It means one ETF goes up 5 weeks ago. Now you find ETF that it is 4 weeks, 3 weeks, 2 weeks, and now you find just ETF that it is going right now. Okay, so you should search with my criteria in order to find all this stuff. Now this is just in general how things work in the market, and you have the choice to do whatever you want. Okay, now I'm speaking here about USA. I have no idea about Europe. It could have the same, or India or Australia or Africa or South America. Each market has its own characteristics, so I don't know. So if someone is from another market, you should search for these ETFs and mutual funds, because they are famous. And all the countries in the world, they have them. If they have stock market, they have 200 or 300 or 500. So Vijay said in India only few ETFs. It's very good. If they are few, it's better for you. Why? Because you just check them very quickly. Here in America, hey Tesla, how are you? Here in America, in the same sector, you find many ETFs. For example, when you say, let's say I say a retail sector. In America, there are a lot of ETFs that are tracking retail, but each ETF has some kind of stocks. That's why you should see the chart that are different. Tesla said, what's considered bad habit in trading in America? Now, bad habit, obviously, if you don't know how to trade, you are doing bad habits. And bad habits, the only thing you know that you are doing bad habits is you are not making money. Since you are not making money each month or each week or each year, for me, I use each year, because it's not a job that you should look as other people. They say to me always, oh, how much should I make each week? How much should I make each month? As if it is a job. It's not a job. Okay? In a month you can make a lot of money, and in another month you can lose money. Depends what you do in the market. So bad habits, I will give you one. If in your account you change the positions allocation a lot. For example, you have a $10,000 account, which is, okay, small account. Sometimes you use $7,000 to buy a stock, and then you buy $2,000 another stock, and then one time you buy 1,000, you buy few shares. So this is not a good thing. This is a bad habit. you are making your account very, very volatile. Okay? Because the more the position is big, according to your account, the more you have risk. And some people get hit because of that. Okay? So, and we say bad habits, there are a lot. It's just depending what you do. Okay? For example, in swing trading, for me, I buy always at the end of the day. At the end. Like 3 o'clock, 3:30, 3:45, because I should see a signal. Some people, they buy in the morning, which is too bad. Too bad. Because they don't know the signal well, and at the end of the day, they can begin to lose from the beginning, from the first day, and this is not what we are looking for. We are looking to look at the signal. Okay? So for habits in trading, there are a lot, depending on what is your level, how often do you trade. It means day trading or scalping or swing trading and so on. Let's drink some coffee, because I was sleeping. I just wake up. So let's drink some coffee and then we can see. Another I can say a bad habit is you don't save more money to your account. This I have spoken a lot in my videos, but people, they don't understand until they are too late in trading and investing. Now the thing is, let's say either you are trader or investor. It's the same thing. It's the same thing. You need to have a bigger account. It is not because you trade, and some people, I'm not saying they lie over you, but they give you a dream and you follow the dream, and you think that they have done the same. I'm telling you, I have seen someone saying, if you have $100, he can make it $100,000 in a month. You know, these exaggerations makes the people very happy. Those beginners who don't have money, and they try to do the impossible. Okay, it's like you have a car that it is not a sport car. Okay, it's just a normal car, and you want to do a race with high brand and cars that their speed is too high and the engine is so big. Okay, you can't do that. Or someone who has never done boxing, he go to do boxing with a professional boxer. Okay, so this is it. It means you are doing something that it is exaggeration. And a lot of people online and YouTube, they do that in order to attract those beginners who don't know anything, and whatever your money you lose it after 1 month or 2 or 3, and that's it. Okay, and this is not a good thing. Prince Singh, he said, "Hey sir, how are you? I am very fine, thank you very much." Tesla said, "I sold my Camry, Karim. My account now is bigger." Oh, that's good. How much you sold this Camry? It should be $1 million or $2 million. It seems that it is a very good Camry, this car. That's very good. Tesla, just try to do your best to make your account bigger, and this is the most important thing. And don't stop. It means if you have other Camry cars that are sitting around, you have a dealership, and all your cars, 7,900, yes, it's very good. It's very good money. Yes, you can begin with it. Hello, Donna, how are you? Thank you for coming, and thank you all your guys for coming. Now, Tesla, what I am speaking about is not a one-time thing. It's not a one-time thing. It's not you sell your car and this is the dead end. You have some money and you stay 5 years, 10 years with the same money. It is not. Try just to have an open mind that in order to make in the future you become a big trader, when you know how to trade, the only problem that you face when you are good at trading is money. You don't have money. Okay? Right now, when your level of trading is not that good and you are not making that much money, it's okay. But after 2 years, 3 years, 5 years, let's say you become very, very good and you begin to make money, but you see that your problem is money. And believe it or not, brokers, they can give you what we call margin account, which is very good. You double your money. You have 10,000, they give you 10,000. 20,000, they give you 20. 50,000, they give you 50. Okay, so you will be at ease when you do day trading or you do swing trading. You have a good the good thing. Duna asked me a question: why are you removing the gold subscription? No, I am not removing it. It means it will be only available for my students. I am not accepting more students. That's it. That's the deal. And all those who have been like subscribers or they cancel subscription, they can come back. But just I want to take it from my website and to leave only the training by training and the silver subscription. It's just a thing I do, and I will see in the future if this thing is good for the guys or not. Okay, because there are a lot of people whenever you give them too much, they try to abuse. Okay, so for me, I want just to take these guys out of the thing. That's it. And my golden subscription stays, but it will not be available for new subscribers after the 4th of September, after the Labor Day. That's why I told the guys, anyone who is interested, you should do it right now. You should subscribe right now before the 4th of September. Thank you very much, Duna, for this. Now the market is in a big move. We are near the end. If things maybe next week, if things are good like this 3 or 4 or 5 weeks, we can get out from this correction and the market will begin a new trend. And when the new trend begins, a lot of sectors, a lot of industries are going to be good. But right now, we have seen a lot of sectors, a lot of industries are doing way, way, way better than the market. So those are the best right now. So in the golden subscription, I have shown some sectors, some industries last week and the other week, and in the future I will make more, because the thing is, there are a lot. If you find, for example, 10 sectors are doing better than the market right now, so you are not going to buy everything. So you should buy what's 1 or 2 or 3 according to what you are thinking of. Okay, but if the market is good, most of the sectors, industries are going good, but not all the sectors. There are sectors that are doing bad. The reason for that is that mutual funds, who are the movers of the whole market, are filtering. Some industries, they sell off, they begin to go down for a long time, and they are doing worse than the market. You find some industries that are in medium, they are doing the same as Dow Jones or S&P 500 or Russell 2000, and you will find that there are industries that are doing better, way, way better. Now, for me, because I like risk, I don't buy ETFs. Okay, ETFs, because they are slower than stocks. So for me, I like to go with the risk. For example, last time I get hit for Facebook and Twitter, a big loss with Twitter and Facebook, but I have other stocks that I have made a lot of money. So for me, it doesn't matter. I recover my money back and I am having a profit. So it doesn't matter for me. It's just because I check my risk every time and I know what I am doing. Okay, I'm not putting all my money on Facebook or Twitter or whatever stock. I can't, and I will never do it because of the risk. Now, if I want to go slow, I can just find ETFs, sectors, and I will go with them. I can do that, but for me, it's the risk is low, so I don't like low risk. Low risk ETFs, mutual funds are low risk because they are down. Now, how many stocks should we trade at the same time? Now, how many stocks depends on how much you have, okay? And how much risk you want. So, let's say someone has 10,000. Some people, they don't like risk, so they use only 2,000, like 5 positions. They don't want to get a big risk, and they are very, very mean. They are very, very mean and stingy in doing stop loss. They put small, tight stop loss, and each time they go, they exit the trades. It's just because of that. So they don't want risk. Okay? But some people, for example, they have $100,000, which is a medium account, and they can use 25,000, 4 positions or 5 positions at 20,000 or 25,000, depending on how much risk they want and depending on the stocks they buy. Some stocks are low risk. So even if you put 20,000, these stocks are going up slow, up, and they go down slow. So you are not going to do high risk in this kind of stocks. Okay? So it depends. And it's you who should know what is your risk and how much and how many positions you do. If you are scared, you can put more positions. If you are not scared, you can limit and you can have fewer positions. Because here is the thing. Here is the thing. If you just succeed when you are trading like us, like swing traders, if you only succeed in a few stocks in a year, you will be always green. You always be having money. But if you if you don't know how to trade, if you don't know how to follow what we call to follow the trend, a lot of people, they exit so early in the trade, and I have given solutions to that. Okay. Now, Duna said with 10% risk. Now there is no what we call 10% or 2% or 1%. Some stocks you can do less than 1%. Some stocks, because they are slow. And other stocks you can put 5, you can put 10, you can put 15%, depending on the stock. So the stocks are not the same. So if you put one thing, it is as if you ask all the people to have the same size of a shoe or a dress or a suit or whatever. You can't do that because the people, some people are slim, some people are big, some people are short, some people are... Stocks are the same. Stocks are the same. They are not, even in the same industry, they are not the same. One stock is so big, you find it $1,000, $2,000 a stock. And you find a stock that it is $1. So you can't do the risk the same. Okay? So even in investing, let's say what did happen, for example, in 2008 when we have the financial crisis, the whole market goes 50%. Warren Buffett, for example, his stock was, I can't remember, it was 195 or 185. It goes to 90,000 a share. Now, what does it mean? He lost 50% of his money. But did he sell? No. He didn't sell because he knows the market is manipulated. So all the stocks will go down because Wall Street guys, they want money. So they put the market down the whole year or 1 year and a half. They put it down. They want a lot of money from the market because those guys, they don't invest or they don't trade. They just come in one time and they hit the market and they leave. As we have seen the correction. They just hit the market 1 week. And I can show you the play and the game. I have showed you this game from the beginning of February. Okay? So you see that. So if you are just buying stocks, if you are investing, this is another thing. You should not mix investing with trading because they are different. And this is one of the most important things you should understand. Don't mix investing risk with swing trading risk. Swing trading risk is small. Investing risk is big because you are looking for the company in a few years. You can just buy today and sell tomorrow in investing. So you are looking only for the price. You are not looking for the company itself. If it has like a future, yes or no. So try just always to separate yourself. As I told you before. Hello, Twitter with account. I will be with you just a few minutes until I finish this subject. Okay. So as I told you before, you should have, in general, two accounts, two broker accounts. One for investing stocks that you leave for 1 year, 2 years, 5 years, 10 years. It's just your stocks, your companies that you like, that you love, and each year they are making money. You can look at companies and you can compare them, and you will be an investor. This is investing. You should look at the company, industries, competition, and a lot of stuff. And if this company is willing to be big or no. And swing trading with another account, the risk is minimal, it's just small, and you are just betting on stocks. If you buy a stock, you should put stop loss because you are not going to leave this stock lose a lot of money. Because when you lose a lot of money, it's like as I always said. As I always said, it's like a bleeding. You have a cut in your hand or something. What's the thing that you have in mind? You have nothing in mind, and is just to stop bleeding. You should stop it with any way. That's why you are scared when you see blood coming out of your body. It's the same as swing trading or day trading. You should not give too much to the market, okay? Because if you give too much each market, each time you trade, each trade, you will not finish the year, and you will wipe all your money out from the account. That's why you should learn how to do it. Now, let's see Clown with Twitter account. He said, what do you think about activities short sellers are bad or responsible for chaos? Now listen, you should understand short sellers are day traders. They don't care where the market will be. Short sellers, it doesn't mean they always short. They can go long in a day when it is a so good days. Now, a day trader, he doesn't think about the market about like an investor. Now, an investor, he hopes that the market continue to go up for 100 years in order that his money will grow and grow and grow. A short seller, he doesn't think that. Short sellers, he think that the day, is it up or down? If it is up, you buy long. If it is down, you short. It's not it is an activity that short sellers do hundreds years ago, and it is the only activity that exists only in stock market. It doesn't exist in other businesses. Okay? You can't go to an auction and you bet on a card it will go down, you sell it, and it's not yours. Okay? So you see that short selling is something special to the stock market. You don't find it in other businesses. You should understand that. And a day trader is a person who follows the direction in the day, up or down. Now, if you find stocks are going down and you are a day trader, why you don't sell short stocks? It's stupid. If the market is all going down, what can you do? Are you going to go long and the day is going down? So this is what the day traders do. They are not just short sellers. They go long and they short sell. Okay? Clown with Twitter account say, like Andrew left. Hey, clown with Twitter account. Who is this Andrew and he left? I have no idea what you are talking about. Please, clown with Twitter account, please write the whole sentence to understand what you say. Okay? So let's drink some coffee. So, clown with Twitter account said, is Facebook going to head in the market like Amazon and Apple? Now, I will give you my idea about Facebook. Facebook or Twitter or other stocks. You should see the whole trend. Facebook gets hit in the earnings. It doesn't mean that this earnings news will continue. You will see it in the market. When you see the chart, I always tell you, when there is a gap down, you should always see if the stock continues to go down. If the stock continues to go down, what does it mean? It means, yes, that stock will be sold off each month and you will see a downtrend. It's like bearish. It's like bearish mood for a stock. Now, Facebook and Twitter, they don't go down and they are not in a bear market right now. Okay? They are not. Now, what about the future? The future, no one knows about the future. If you believe in a stock that it will be becoming something, you should invest in it. It's a company that you should invest in, and you should wait many years to see the result. So it's not just to know from now. Okay? It depends on their model, business model, and how do they make, and how much money they make, and the analysts, if they are good with this kind of stocks, people will buy, because a lot of people, they buy because they are influenced by these analysts. Okay? They are influenced. When you watch TV too much, you will be influenced about what they say, and you have no opinion. So you get bombarded with these opinions. Buy this, sell this, hold this, don't buy this. They give you orders and you follow. And this is too bad. This is too bad. You should decide by yourself. Because in stock market, in TV, they are looking only for daily activities, daily, what happened in the day. Oh, Facebook has gone down 2%. They just magnify things, but they will never teach you how to follow the trend or what's going on, or they give you good information. They give you only momentum information, and they want you either to sell shares or to buy shares according to what they think, and they are getting money from that, because those people, they don't buy and they don't sell. So you should understand the game in watching. That's why TV makes money. The more people they watch, the more they bombard them with this information that it is in general false information, especially about the future. Now, if they say a stock is going up and it has a good future, but this stock can go down after a few months. So in general, they don't know nothing about what will happen in the future. What happens in the future is the traders who decide. It's not those guys in TV that decide about the market. If they decide, we should stop trading, we should stop investing, and we are looking for them. And they say, okay, buy this stock, we buy. It goes up 2 years or 5 years, we make a lot of money, and then they ask us sell, we sell. Do you think that the market will follow these guys what they say? No. The market will never say anything. What happened with the traders is this what you see on the price. So, Clown with Twitter account, I'm telling you, in 2012, when Facebook was going down from $45, it was going down to $17.55. I always say buy Facebook because I see some trends. Now, when the stock the next day goes down, I trade. But for me, I am not an investor. I say at that time, when they say it's a bad investment, don't buy Facebook. Facebook doesn't make money. And they have a bad opinion on Facebook. It means these people are hurting companies, although they give you bad opinion. Okay, I see that live stream is into red. I don't know if you are listening to me. If you don't see the picture or is freezing, it's okay. If you are looking, for example, the sound is good. If the sound is good, please say yes, and this is the most important thing, because I see here the live becomes red and it says it's not receiving that much. Okay, so it's medium. It's not that good. I don't know if you are looking, if you are listening very good. If you are listening good, please say yes. Some of you guys who are listening. So do you get the voice? Are you listening? Because it turns all changes have been. So are you listening? Okay, so I didn't get any oh, you are listening. That's the main thing. If you are listening, it's okay. Now, even if you don't see the picture, the video, it's not important, because right now I am not showing any charts or any explanation. So another question from Clown with Twitter account says, in which case the short squeeze lasts for many days? Now, see, to understand this short squeeze is just when the people, a lot of short sellers, they sell short a stock, and then someone big, like a mutual fund or hedge fund or someone bigger than these guys, he comes and he buys all what is in the market. This is what we call a short squeeze. So those people who are shorting, they have to buy at that time or the stock will be going up and up. They should and they must buy. Okay? So they get a big loss. That's the thing. But no one knows. It doesn't take few days. It takes just few hours. Those people, they are doing day trading. They are not doing swing trading. When they see something bad, they should leave. And you will see that. How do you know that? Is when the stock is going up by force. It means the stock is going up so good. But short sellers, you don't see them. Okay? You don't see them. How can you know if these people are having short squeeze or no? Since you don't know them, in the volume, understand that. Because most of the people, they don't get the volume idea. The volume is becoming high, but you will never know if it is a buy or it is a sell short. Now, when you see the price, you will understand. For me, in order to make it easy for me, even if I do a day trading, I don't look at the volume. I don't care the volume. What I look is the price. If it is going up, it means there are a lot of buy. So I buy long. If you see that the stock is going down and continues to go down, I know that there are a lot of short sellers. So I just sell short. That's the day trading. Okay? And it is very dangerous idea to do swing trading in selling short. It's a big idea. Okay? A lot of some they do that. Mostly they have big selling short positions, and you will see them. You will see them on some websites. They show you how many shares are sold short. Okay? Most of these companies are bad companies. It means companies that they lose business. So these guys, they know the situation of these companies, so they go ahead and they sell short and they wait for 1 year, 2 years, 3 years, and these companies are going down and down and down and down. For example, I have given you always an example of GE. All the market is going up except for this company. I will show you right now what happened to GE. At least you have an idea, and then we go to questions. Okay? So, let's go to a chart. Okay? Now, GE, look at this. Did you see the stock was $32 in December 2016? It means 1 year, more than 1 year and a half, 1 year and 8 months. The stock was 32. Now it is 12. What do you think? This is a big short selling positions from here, and it's going down. Okay? This is a big short selling positions. Now, I will just give you a day. It's 12 December. Now let's see the Dow Jones, because GE is in Dow Jones. Let's see the Dow Jones when we speak about December 2016. Now we go to December. Yes, this is December here. Now, do you see that Dow Jones is all going up? See how the trend is? It is so good trend. But the Dow Jones is going up with all the stocks, and GE is going down. Why is that? It's just because GE is losing business. It's one of the biggest and the oldest companies in the USA, but it is losing business. I don't know what will happen in the future. If it continues to lose business, and as I told you, it's going down, we will never know where it goes. Okay? So that's it for this thing, as I told you. Now, so we finish the question of clown with Twitter account about, he said, in which case the short squeeze lasts for many days. Now we go to MM. He say, hello Karim, thank you so much for the education. This is Maurice. Thank you, Maurice, for coming. I think I have seen your ID before, and welcome, and you are always welcome to ask questions. Arshad S.A. Kadir, Assalamu alaikum, wa alaikum salam. How are you? Clown with Twitter account. Why Wall Street keep stabbing each others in the market? No, see. Short sellers, this is sometimes when the people, they talk about conspiration, manipulation, and the other stuff. This is part of the game. Okay? Now, they are free as you are free. For example, if you are, for example, right now, you can go to the market. There are thousands of stocks. You can short any stock that you like. You can go long with any stock that you like. Does someone send you an email or call you and they say you should not do that? It will never happen. Even your broker has no right to talk to you about anything you do. He will not talk to you about risk or about what you should do, because it's not his business. He doesn't interfere with what you do in your account. Even if you lose all your money, he doesn't send you an email and he say, we are sorry that you lose your money. He will not say that. So freedom in the market is one of the best things in the market. But these guys, when they want to hit the market, you will see them. You will see. For example, if I show you the chart, how the market goes down in the Dow Jones, just an example. Okay, you look at this. Just an example to make you sure. Okay. Now, you look at this. For example, the Dow Jones was 26,616.71 cents. You see these days, especially this day, where the market lost about 480, and then this day, where the stock market has lost $1,000. Okay, 1,000. It means he has gone 4% in one day. Now here the stock, here we have what we call there was shorting, but later the stock has been going up, or the Dow Jones, and then you see this from 24,900, it is another 1,000. So you see these three, 1, 2, 3. This is a feast for all the short sellers. Now what does it mean, a feast? It means from the morning the whole market is going down, and a lot of people, they make too much money. It's not just Wall Street. All the people who know the day. Now, in order to know the day, you should be a day trader. And opportunities to make money either from shorting or from going long each day. There are thousands of stocks that they move so badly. penny stocks, big stocks, and they are moving in the day. I'm not speaking about gap up or gap down, because this happened after the market close or before the market opens. And this, if you are aware about this, you can follow, you can make money. But the problem is that this happened in the day, and you will see in the morning, you see the whole, if you go to the news, you see all the people are screaming and shouting and say, oh, what did happen to the market? The market is going down. What's it? Okay. So you can go and you can see some stock going down and you short them and you make money. You will be like Wall Street guys that you are, that you say they stop each other. They don't stop each other. They find an opportunity to make money. And they just says it. That's it. Understand that if you want to become a day trader, you should have the tools to find the news, to have the news, and the news, when it comes to some stocks, it doesn't wait for you. Half an hour, a few minutes, half an hour, 2 hours, 3 hours, and you see that the stock is collapsing. And some other stocks are going down, because are going up also because of the news. So if you are a day trader, you should follow the two directions of all the stocks. You don't need 1,000 stock a day. No, you need only one or two that it is good and it's either going up or going down and you make money. And you should do this as your business. It means you have some money and you have tools and you are always looking for these opportunities. Okay? So for me, it's not Wall Street stopping each other. They don't. They just do. They just have opportunities and they seize them. And you will never know who are these people. They come, they do some stuff, and they get out. That's it. Okay? Thank you very much, Clown with Twitter account. How are you, Ahmed? Kamal Ahmed. He said, hi Kareem, why all the pro stock market educators always talk about win-win and win, but they never talk about losses incurred, though 90% losses? No. They say, okay, 90% or 95% they lose are the beginners, not the professional traders. And professional traders or educators or whatever, if they are in the market, it's not just they know how to trade. They maintain their account and they don't blow their account with stupid trades. Okay? For example, I just give you an example, with these people that are beginners, they don't know what they're doing. I just give you an example to show how beginners, they lose all their money. Even if they have $1 million, $2 million, $5 million, but they are beginners, they lose a lot of money because they don't know how to manage their money. Because in making money, it is not only how to trade, but it is how to manage your account. Now, if you know how to trade and you don't manage your account, in the future, you can lose money. Okay? So 90% or 95% they say in the stock market, it is small accounts and most of the people are beginners or people who are doing stupid trades. I will give you an example. Okay? Let's say you have $100,000. You go to a stock that someone tells you, or you have seen in the TV, that the earnings are so good and you can have a gap up. Now, what do you think? You say, I am with the risk. You have $100,000. You go and you buy 1,000 or 2,000 calls options. I'm telling you this example to make sure you understand why a lot of people, they lose a lot of money and they wipe out their account. Believe it or not, when you buy calls and there is a gap down tomorrow, your contract is lost forever. There is no your number, your strike price. It doesn't exist anymore. Now, what will happen to your 100,000? You lose it all in one day. This is what I am talking about. I'm talking about people, not only with the small accounts. You can have a big account and you can wipe out all your account. There is 2 weeks ago, 3 weeks ago, someone who comes here, he buys an ETF. He doesn't know what is this ETF tracks for. He's just buying ETF. The next day, he lost 90% of his money. And it is all his money. He has, I think, $12,000. The next day, he finds only $500 or $800. Now, why is that? It's just because this ETF, it's about futures. And I told him, do you know what is this ETF or exchange traded fund? What does it track? He said to me, I don't know. It's just ETF, and they read an article that it is a good ETF and you can make double or triple your money in 1 week or two. And, you know, he just bought it with all his money. So doing mistakes and stupid mistakes can lead to wipe out your account. Now, professional traders, they don't wipe their accounts. They don't, because they know risk management. You will never, in stocks, you will never lose all your money in stocks except when you are a beginner and you don't know what you are doing. This is the thing. I'm telling you always. Now, when we say win, 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 you said always people, they talk win, win, win. No, there are losses, but these losses are small compared to the wins. And that's why they make money each year. For me, for example, I lost in Facebook. I lost my my profits. I don't lose money. It means I was following the trend and then we have a gap down. Okay? So I lose my profits, but my money, I don't lose any dollar. In Twitter also I lost. But I have other trades like Apple. I am making a lot of money. So I will cover all my losses in those trades and I make profit. That's how the people, they trade. And I showed, if you, I don't know if you are my subscriber, golden subscriber, I showed my stocks like 2 or 3 months ago when the trend has begun to my subscribers, to golden subscribers. And I showed them my stocks and they say, this is what I am in and where you are. And before the earnings, I know it is very dangerous to stay in the earnings, but I told my my guys who are into these stocks, I say, okay, I am in 3 stocks. The earning is coming. If you are scared, just get out with your profit that you made. But for me, I'm staying. But don't follow me, because for me, I am with a big risk. Okay? So I lost with Facebook, I lost with Twitter, but I lost only my profits. But Twitter and Facebook, I have made other trades and make a lot of money this year and last year and the other year. So I am always with them. I am always making money with them. But sometimes you have a loser. But losers are always. But losers in my strategies, they are very small losers compared to the winners. That's why I make money. Okay? This is how the people, they make their money. It doesn't mean that and there is no what we call success rate and winners and losers ratio. It doesn't exist in me. I don't believe in it, and I have training level 5. You can check that training. How to make money from stocks. I give you the formula how all the people, professional people, are making their money. They are not making their money because of a sure trade. It doesn't exist. Because if there is a sure trade, someone who will sell his house, you sell your car, you sell everything, and you put it in a trade if it is a sure thing. But Professional trader, they use money management and they know how to trade. This is the main difference. Beginners, they don't know how to trade. They have no money management education, and they just trade until they lose all their money. Because doing the same mistakes will lead to the same results. If you are losing, it means there is something wrong in what you are doing. If you don't stop and see these things, you continue to lose until the end of the year, and then you wipe out your account. This is why some people lose a lot. But losers and winners are always for everybody. For everybody, for day traders, swing traders. Always. Because when you do a trade, it means you bet on a stock. That's it. You can lose. But when you lose, you shouldn't lose that much money. And this is the difference between professional traders and beginners. And this is what we are doing here, is to give you insights how things work. Because if you don't know how things work, you will do the same mistakes and then you lose a lot of money. VJ said, what is your opinion about 2x, 3x inverse ETFs for shorting index? Okay, what did I tell you? If you go with 2x or 3x, what does it mean first? 2x and 3x, it depends on the ETF. Sometimes it is daily, sometimes it is not daily. So what does it mean? It means you amplify your profits by 2 times or 3 times. For example, if the stock goes $2, if it is 2x, you will make $4 for each share. For example, instead of making, let's say you buy 100 shares of this ETF. Now, when we say inverse or not inverse, is the same thing. Now, if you, let's say it is 2x and the stock goes $2 and you buy 100 shares. Now, how much you will make? Instead of making $200, you will make $400 in that day. Now, let's say it is a 3x. How much money you will make? You will make $600 in that day. Now, the problem that you should know is that if you lose, you will lose double. The stock goes down $2, you lose $400. If it is a 3x, you lose $600. So this has to do with risk. If you like risk too much and you know how to handle that, you can do that. Now, inverse, if the stock is going down, or long if the stock is, it's the same. The idea is the same. So whatever you do. So a lot of people, they see 2x, 3x, but they don't know what does it mean. That's why this is my suggestion always for ETFs. Whenever you want to buy ETF, go to Google and put the ETF and look what does it track. As a matter of fact, never buy very high risky ETFs. Those that attracts something that you don't know. For example, forex, options, futures, cryptocurrency. All this stuff that it is so and highly risky stuff. Your ETF can change into a price. You can make a lot of money, but you can lose a lot of money. Now, in terms of risk, if you want to wipe out your account in 1 trade or 2 or 3, you can do that. I'm telling you. And this happens always in the market because the people, they don't know risk. If you know risk, you know what you are doing, you can do that. But if you don't know and then you get something that you will never know, it means that you have no idea what you are doing. And this is the big mistake that all the new traders do. It means instead of taking a training, try to understand things, try to trade just little bit by little bit. Don't put too much positions and big positions until you are comfortable with trading, until you know what you are doing. And this is what I always say. Okay? So thank you, Kamal Ahmed, for losers. But understand that all the professional traders, they have winners and losers. All of them. There is no one who... If someone tells you that he has 100% or 75% or 80%, this doesn't make money. Okay? Even if someone tells you, I have 75% rate of success. It is not... it's not something that he makes money. Making money is not by percentage of winners and losers. And this is what I explain in training level 5. How to make money from stocks. It's a formula. So winners and losers ratio is a false formula, and it gives you bad results. That's why I give you my own formula that all the professionals do. All of them. There is no exception. And you will see it's just this. I say yes, it's just this idea. Okay? Now these are secrets of trading. You will not find it in books. You will not find it in online videos. You will never find it. Why is that? Because this information makes the money in the market. People are not willing to give their secrets to people like this without paying. At least you pay for the information. Now, when you pay for the information, you know the information, you practice it, you make money. And then you, in the future, you can sell this information. So it's not in YouTube, you go for free training or something, you find this kind of things. Even books, they will never talk about it. They will talk to you about... that's why some websites, someone tells me, he told me, Karim, well, what are the winners and the losers ratio? You can put all your information into a website and it gives you the average, it gives you the percentage. I say I don't need them. I don't need them because what they give me is a false information. 75% winners, it doesn't mean that you are making money. You can lose money with 75% winners, because winners and losers are not what you think. Okay? And websites will never give you these secrets of trading. People who trade for many years and say they succeed making money, they know all the same information. And this is, yes, techniques of trading, yes, they are different. But the concept of making money is the same. Is the same. That's it. You just know how things work, and then you can make money in the future. Okay? So let's drink some coffee, and then we can continue. So thank you, Vijay, for your question. Now, Sufyan, welcome, Sufyan, for coming here. And Shamaka Pitaway, thank you for coming. I have never seen your name, so welcome to our live session about trading and investing questions and answers. So Sufyan said, hey Karim, do you think that stocks now are going down or they may go up next week? Man, the stocks have been going up for many weeks. I have explained that, and now I will go you to the chart and show you the Dow Jones, and I will show you what's going on. Okay? Now, look at this. Now, as you can see here, this is the resistance line, this is the support line. It means where the stocks are up and down. Now, the market has been going up and down since February, the month of February, the beginning of February, going down and up, going until this day, which is 28 June. There is a trend, as you can see, and this trend is not the same as those trends. And I told you before, like 1 week or 2 weeks ago and more, I say this trend looks strong and stocks are going up. So if now it's 25,964 and here the high is 26,616. Okay, so we have only $700 and if Dow Jones crosses the resistance line, the trend will continue. You see this trend that we are speaking about, it will continue. If here it will continue and the stock market will be so good. And that's why, what did I tell you before? That I see here there are a lot of industries that are ahead of the market and sectors. And in my golden subscription last weekend and the other weekend, I have shown you guys sectors ETFs, industries ETFs, and how they are good and they are better than the market. And the market is moving up, but it is not the whole market. Understand that there are some sectors, industries that are going down. If you buy them, if you don't know when you buy them, you will be losing a lot of money, since maybe they can continue going down. Now, you ask me the question, why is that? It's just because mutual funds, they buy some sectors and they sell some. Those sectors they sell, they go down because who buys them? Understand that mutual funds, he has thousands of billions in his hands. He can do whatever he wants. That's why he can move the market. That's why mutual funds are called the market movers. They move the market. But you should know which sector, which industry is going up, which sector and industry is going down, and this is what I show for my golden subscribers. Okay? That's it in general. So when you say stocks are going down or maybe go up next week, stocks are always going up and down. It depends where you are, Sufyan. Sufyan, you should understand that the market is always moving up and down. But in general, the market in these weeks is going up, but it's not yet to have a bull market. I will announce that when the market begins to be a bull market, but not now. Okay? But sectors and industries are going up and they are doing better than the market. This is a fact. And I showed those ETFs because there are hundreds of ETFs, there are thousands of ETFs. Okay? So it's not only one or two, there are a lot. So Sufyan said, what about Nasdaq chart? It shows things go up. Yes. Nasdaq is only the stocks that are in Nasdaq, not in New York Exchange. But if the market is going up, they should go up. But always try to think about major indexes. Major indexes, they show you how the market is doing in general, but they don't go to sectors and industries and they show you each sector, each industry, what it does, because it's too much. You should have a way to search. And this is what I teach. I teach you how to search for sectors and industries. Not the whole thing. The whole thing, you can see it. You can buy it also. But the whole thing is weaker and slower than, for example, a sector can do better than the index. It is in, but it can do better. An industry can do better in their own index. It can do better than its index because the stocks are not the same. So this is always what I teach, and this is what I always show, like stocks, ETFs, and sectors. Sufyan said, thank you very much. And he said, I hate Amazon. It goes up all the time. Okay. It's not only Amazon. We have Amazon, we have Google, we have Apple in the past. We have a lot of stocks that go up, but you don't see, because you see only few. You see only few that are in the news. There are some stocks that are doing better than Amazon. A stock that it is $20, in 1 year it goes to $100. This is better than Amazon and Google and the other stuff. So it's just because when you go to the news or you go to the TV, they show you what they want to show you. They show you only few. But the market is not few stocks. The market is thousands of stocks. So if it is doing good, why you don't buy it for many years? Well, what do you say? Okay, you buy it and you leave it. Bill Muya, hello Karim. What platform you trade? Now, platform, you mean the broker? Are you meaning the broker? My broker is E-Trade, but I was before. E-Trade is a big broker. It's a USA big broker, but the commissions, I think it's too much. I think it's $6.95 is too much. For me, I get a better, because I was with another one that it is better in everything, but it was bought. Okay, it was bought by E-Trade. It's like a, in stock market, it's like a fish, a big fish. It's a small fish. So big brokers, they like small brokers that are successful and they buy them. Now, why they buy them? Because they have maybe hundreds of thousands or millions of customers. When they buy, and these guys are trading, they can make a lot of money. That's why they do that. Okay? This is... Sufyan said, do you trade from 4 a.m. to 8 p.m. with trade platform? No, I am not a day trader. You can. This E-Trade, yes, you can trade from 4 a.m. to 8 a.m. because you can buy, you can sell according to the market, before the market hours and after the market hours. But for me, I am not a day trader, so I don't follow. I only buy at the end of the day before the market closes at 4 o'clock. 3:30, 3:45, I buy. So I don't, most of the time, I don't care wherever people buy. For me, I buy by the signal. I have a signal according to my strategies and I buy accordingly, okay? So I am not a day trader. Shamaka Pitaway, is there a discount code for the golden subscription? Okay, Shamaka. My golden subscription will not be available after the 4th of September. My subscription is deeply discounted. When you subscribe, you get 13 training levels for free. How come, what can I do more in order to in order to make it more and more. So you are, by subscribing, you are saving about $1,200 by subscribing. Because if you go and buy my training levels, you will see that it is not the same as golden subscription. Golden subscription are for those who really follow me. When there is something in the market, lessons, people ask me questions, whatever questions, people, they give me stocks, they told me, what do you think, this is the thing about what I do. Okay, so Shamaka, my subscription will not be available after the 4th of September because it gives too much. Okay, it gives too much training. Almost 13 training levels are for free, compared to a silver silver subscription, which has 5, which is only $25 a month. It shows you how to search. If you are not interested to subscribe to golden, you can subscribe to silver, which is $25 a month, and it is about search. If you are looking just to search, you are not looking to learn about stop loss, how to follow the trend, money management, you can buy them separately as training levels. You go to training levels and you buy it and you study it. You don't need golden subscription to do that. You can just buy each month or each 2 months. You buy training, you study it, you practice it, then you go to the next month, you go buy another thing, whatever you do. That's why in this Labor Day, I give the highest discount in training levels, 75%. So at least a lot of people, when they have this opportunity of discount, they can order a lot of training and they leave them forever. Because when you buy a training level, it will stay. It will stay and you can watch it day or night or wherever you are. Thank you, Shamaka Pitaway, for your question. Now, Sufyan said day trading is headache. No, it's not a headache. It's a lot of people, they like, because there is a lot of excitement. You find opportunities daily. You go to the market in every day. You find stocks going down, you can short. You find stocks that are going up each day, so you can buy and you can make money. So it's an excitement. Those people like excitement. They don't like to wait for many days or many months like us, like swing traders, and they don't want to wait many years to see the result. They want now. They begin to trade in a few minutes, half an hour, 2 hours, and they should see money. If they don't see money, they close the trade and they do another trade. Okay? It's like this. Bilbao said, Shamaka said, I think I would rather have the golden subscription. Yes, because you save too much money. And you can cancel at any time. Even if you don't, you go inside and you don't know how to cancel, you send me an email, you say, can you cancel I will cancel that. So it's not, but understand that most of the people, if you stay only 1 month or 2, you can never do that, because there are maybe right now thousands of videos to watch, training and other lessons. So 1 month is, if you just go and just watch, you can't make that. Bill Muya said, you have most logical answers. Thank you very much. Because I trade the price only, I don't use the news or what the people say. That's why it is with a logical thing. Because here is the thing. The price doesn't lie, but the people can lie. Online, when you go to even the CEO of companies, they can lie. They can give you false information. They say, oh, the company is doing good, but they know that the company is bad and it is losing money. until the next quarter when they give you information, you will find out, but it is too late. 3 months is too much. A stock can be 100, it can go to $10 in 3 months or $5. So understand that. So Shamaka, you should, here is my email and my website. You can go there and you can just check. If you have questions, send me. Here is my website and my email. If you have any questions, just ask. So Sachin Palkar said, "Hey sir, I am very impressed with your true thought. Now, most of what I say to you, I got it by experience. It means I learned the hard way. Okay? In order to get to know something, you should dig deep and you should practice. Practice is king. It means when you practice, you discover things. You discover rules. You can add rules, you can take rules. It depends. Before, when I was reading some books and they say you can make rules and you delete rules and you can change, I don't understand what they're saying, but they don't want to tell you directly what you should do because it's a lot of money. You can't just someone who lost hundreds of thousands of dollars and then he becomes successful. He will give you information because you buy his book with $20. Okay? This is insane. So most of the people, they don't give you secrets how to trade. They give you general things that all the people use, and you will find this in bestsellers books. They give you general ideas, but in real, most of these ideas doesn't work. Okay? So that's the thing. Shamaka Pitaway, thank you very much. Shamaka, if you need anything or you have questions, you can send me privately with my email and we can discuss whatever you are looking for. Okay? So another question with Flint Wagner. How are you, Flint Wagner? Because a lot of people, when I see new YouTube IDs, I congratulate them and I welcome them. What has more probability of occurring, gap up or gap down? Now, Flint Wagner, I'm telling you the truth. There is no probabilities. But there are secrets about this. But it doesn't mean that it is a true thing. So probabilities helps, but it will never give you a true thing. Okay? So sometimes a stock is going up and it can have gap ups. But sometimes the stock is going down and it have gap ups. So there is no news comes with the reaction of the trader. Sometimes, believe it or not, this is the good thing. Sometimes in the market, because I follow Facebook and Twitter and Apple a lot, Facebook and Twitter from the beginning and Apple like 5 years or 6 years, when you see that, you will never know, because the news, when they come, sometimes the news are good, but the stock doesn't gap up. So even if we have good news, it doesn't mean that the stock will gap up. Even if we have bad news, the stock sometimes doesn't go down, because buyers, they are a lot, and short sellers, they can't short it, and they see that there is a big support line, a big support. So a lot of people are buying because of the TV, they ask them to buy or whatever. So probabilities are very rare. And for me, in general, I don't use probabilities in you should just risk your money, yes or no. And I always risk my money with Twitter and with Facebook. It's a long time. I have made a lot of money from gap apps from Facebook and Twitter, especially Facebook, because I follow it for a long time ago. I follow it, so it's from the beginning. So I know in general how the people react. But news, it's just news. Sometimes it is bad news, and the people they short. You can see it when after the market, when the market closes, if the news comes, you can see it. You can just go and watch your broker chart, and you will see the news comes, and you will see the price move. But understand that when they move so fast. The stock can go $10, $20 down in a few seconds. It's just a gap down. But sometimes it continues to go down, sometimes it doesn't. It depends. So you should, Flint Wagner, if you want to deeply understand gap up or gap down news, you should be a day trader. You should do like a day trader. You should find the news when they come, and then you see if there's an opportunity to buy or sell. But you should sell before 8 p.m. at night, before the market closes for sure. Because from 4 p.m. to 8 p.m. you can buy and sell. It's called after hours trading. If your broker allows it. For my broker, which is E-Trade, it allows trading from 4 a.m. to 8 p.m. So all the year, the whole day. Okay, but some brokers, they don't allow you to do so. We have Fida Hashim, long time admirer. Thank you very much, Fida Hashim. And if you have questions and you want private questions, you can send me. You can send me an email. And you can check my website. If you have any questions, you can just go and send me questions. Thank you very much, Fida. James Armstrong, how are you? I always remember your name. Thank you very much for coming. And Fida Hashim said, first, hello to you and thanks to be here. Welcome, Fida, for coming. So, Bill Muja said, if you were beginner, what's the steps you take? Now, in general, a beginner, what do you need? If you want to begin right, you should do a training. If you want to discover the rules by yourself of trading, it takes you years and you should spend a lot of money. Okay? But the training makes it easier for you to discover things without waiting many years, because the most of the people, someone for example has $10,000, instead of having $500 or $200 or whatever, or a subscription, instead of having information and have the way to trade, and he begin to practice for real, he will do that. He will do the beginner's strategy. What is this strategy? It is hit and miss strategy. What does it mean? You buy and you sell, you buy and you sell, you buy and you sell. You don't know why the stock go up. You don't know the stock why it goes down. You stay with the losers too much. You lose too much money. You see a stock going up and then you exit because you have $100 and you are happy. All these mistakes that you do will affect your account. And most of the beginners, they wipe out their account, and when they have no money, they begin to look for training, but they don't have money. I have seen people sending me emails. I find one guy, he has $45,000. He's a day trader. He go to penny stocks and he do the most stupid trades. After a few months, he has only $5,000. He lost all his money. You know, $45,000, you get 5,000. It means that you have done a lot of big mistakes. Now he asked me, oh, Kareem, can you teach me and I double my money in a month? I say, man, who tells you that? I don't own the market to double your money. And who tells you that people are doubling their money? Who tells you this? So you should, because the people, they don't know the real thing in the market. The real thing in the market, when you are a beginner, you should protect your money. The most important thing, not to make money. At first, you should protect your money. And then you can make your money when you know how to trade. Now, if you don't know how to trade, you will be losing money and you don't know why. And you continue doing the same mistakes, and then the result is always no. So for me, the best thing to do is to get a training. For example, my first training, level 1, is for free. You can just go to my website, take this training. If you want to save a lot of money, you can do subscription, silver or golden subscription. It is just a way to save more money. That's it. James Armstrong, his question is, do you think there will be another stock market crash in the near future? Man, I'm just explaining that the market is doing so good these 5 weeks. Who tells you that the stock market will go down and you have crash? This I haven't seen yet. But what I see in these 5 weeks, there are a lot of sectors that are doing better, way better. They are doing good. This is a good signal that maybe the market, we will end this correction soon, and maybe next week or the other week, and then the stock market can continue the big trend. So I am now positive because I see the market is positive. If in some few weeks the market is going down again, I will make videos and explain that. But right now, James Armstrong, right now, the market, 5 weeks, it is so strong. A lot of stocks are doing so well. So in order to understand this, if you take my how do I search for stocks, how I know, it will be easier for you to know everything in the future. Now, Fida Hashim said, do you know about Shopify stocks? I am so much into, but not much gains. Now, what is this Shopify stock? Can you give me the symbol? I will check it for you right now. Now, what is the symbol of this Shopify? Because I don't. There are thousands of stocks. So give me a symbol, and I will try to see it. I don't know if I can find it. Oh, yes. Okay, I find it. It's called Shop. Yes. Shop, S-H-O-P, which is a new IPO. It means a new stock. But see, when the stock is going to a trend, this is the trend. You see, it's a very, very long trend. The stock was only $44. Now it's 300% from December. It means 1 year and 8 months. This stock has made 300%. 300%. If you put, for example, 10,000 here, you will be getting 30,000 after one year. But understand that it has corrections. These are very hard corrections. So be careful of that, of these very, very high corrections, and you will never know in the future. So if you want to know, you can just, when you get the subscription, I can make a video for you how to deal with any stock. Okay? That's the deal. Now, so the stock, it can just go up forever, and it can go down forever, except when the company is losing money. Mutual fund, they will take their money from this company and they sell shares through the years, and the company collapse. Because mutual funds managers, if the company is not making money and it's not growing, why should they buy it? They will sell it because they lose money with this company. Okay? Sachin Palkar, he said, I am Sachin Palkar from India. Will outside hedge funds are volatile in the market? So, listen, hedge funds managers are traders who trade a fund. They are not, don't confuse hedge funds with mutual fund. Mutual funds, okay, most of the time they work with big companies, okay, and there are a lot of brokers that people make accounts in order to buy mutual funds. But hedge funds are for the rich, they are not for the poor. It means, for example, you want to be part of the hedge fund, so the manager, if he wants to accept you, you should have money. Maybe 1 million, will be 5 million, will be 10 million. Depends on the hedge funds minimum. So forget about hedge funds. I don't know if there are hedge funds with small money, but I don't think so. I don't know about India, but the hedge funds are mostly for rich people and wealthy people. Rishanth, he said, hey, hello friend, thank you for advice on Tesla. I made nice gains, thank you very much. I want to know your thoughts about Nasdaq. Seems like it went so much in short time, but all other markets lagged. No, see, when you say Nasdaq index or a New York Exchange index, or it is all the stocks that are there. But Dow Jones is doing good these 5 weeks. It is so strong. So why you are going with Nasdaq? So you should know where you want to be. If something is doing bad, why you stay with bad investment? Either trade or ETF or mutual fund or whatever. Why you stay with losers? If you see that you are losing money from something, change. So I don't follow Nasdaq. I follow Dow Jones, S&P 500, and Russell 2000. This is what I follow just to see in general, but I don't need them. For me, when I search for stocks, I don't need indexes. But the indexes just give me a general idea of how the market is doing. If the market is strong, it means there are a lot of stocks that are doing good. Like in Dow Jones, 5 weeks, the whole market is doing good in 5 weeks. So why should I go with another index that it is doing bad? And Nasdaq, it has a lot of stocks. So you are looking for all the stocks average, which is not too good. Okay, I don't like that. Okay, Flint Wagner said, you said if you sell short a stock, there is a lot of risk if a gap up occur, how is that different from when you buy and a gap down can occur? Oh, you are looking for the risk. What's the difference? Now, Flint, I will give you right now an example showing you if you go long or you go short with a penny stock, at least you understand what I'm saying. Because going long, it is not the same as shorting in terms of risk. Okay, so let's drink some coffee, guy, and after I finish drinking coffee, I will show you. So let's go to the chart, to the explanation, and I will show you a concrete example. Okay? So in order to make it easy for you and for me, let's say we have $1 stock. $1. Okay? Let's say, in other just to example, you buy 10,000 shares because the stock is so 10,000 shares. It means you put in this stock $10,000. Now I will show you in two cases, two scenarios. You bought it. This is a gap up and this is a gap down. What will happen? Just an example, okay? Okay? So, now let's say a gap, this stock, let's say, oh no, I will show, no, not gap up or go down. Sorry for that. I will just try to concentrate on the example, not to be, okay? So here you go, you sell short 10,000 shares, just an example, okay? So you sell short a stock, and let's say you hold for the night. You hold for the night. This is why I showed you that selling short, especially when you do for many days, what will happen? Let's say $1, you sell short 10,000 shares, and you put $10,000. Now the next day, when you sell short, the next day, the stock goes from $1. Let's say it goes to $5. A gap up. There is manipulation and the stock goes up. Now, can you tell me how much you are losing here in this sell short? Are you losing only $10,000? Because the stock was $1 and you think the stock is going down because it was going down before. So here, how much you lose? First, you lose $10,000, so your account is 0. And then, because the stock goes from 1 to 5, your broker will ask you $40,000 to bring right now. This is called margin call. A margin call, what does it mean? It means you have a very big loss because you are using margin and the broker has paid this $40,000 from his pocket. So it is a debt. So you lost $10,000 and you have lost $40,000 that you should bring to the broker. If not, if you don't bring his money, he will go to the court and you will have to pay, or maybe to go to prison or something like that. So you see how much risk. So the risk here in selling short is called illimited. Illimited. The stock can go $10, it can go $40 in one day or two. Now, let's say you go, for example, you go long. Okay? Let's say you go long. I put long 2 times. Okay, you buy long. And let's say you have this $1, and then next day they announce bankruptcy. Well, what does it mean, bankruptcy? It means that the company doesn't exist anymore because they lose the market. This company doesn't exist. They have bankruptcy. Now, how much you can lose? You can lose only $10,000 that you put. This is what you lose if you go long and there is a gap down. Not a gap down, but the stock has been out. So do you see how selling short, it has a limited risk, and going long has only the money that you put, which is limited risk. Limited risk. So this is the only difference. Now, even if you say, for example, you say to yourself, no, I will not do night, I will not hold for the night, it's day trading. Yes, I told you, some stocks go from $1 to $5, it can go to $10 when it is manipulated, and it can happen in seconds, not in hours. It can happen in seconds, and I can show you stocks that go from 5 cents, 10 cents, it go to $2, $5, $6, $7. It means these people, if they short in that day and they don't know how to short, they will have a high risk. That's why selling short is for people who are not beginners. So never do selling short when you are a beginner. You should know, and you should always have small positions. Don't have big positions, because if things happen bad, you will be losing that much. Okay? This is just an idea. Okay? So Flint Wagner, hope you have understood this. It's all about risk, and it is not the same. There are some people who go bankrupt and they have a large debt because they play too much. They play and they don't know how to play. Okay? And they think it's just so one time he makes money. It means that he will be always making money, because selling short is Hey Duna, what's this thing you are doing? You are mixing everything. I will come to your thing. This is funny. Okay. Bill Muja said, when you go to purchase the golden subscription, ask you for discount code what it is. No, Bill Muja, the golden subscription, it is too much discounted, because whenever you subscribe, you get 13 training levels for free. These 13 training level for free, it could be $1,000 or $800. How come you get $800 or $1,000 of training? You get it for $55. It's too much. There is no more discount for something that it is too much discounted. And understand, Bill Muja, that this golden subscription, it is for those who are following the market and they have money and they are trading. Okay? So it means it's something that it is with the market. With the market. For example, now there are sectors, there are industries that are going up. If you don't buy now, it's not good to buy next month or the other month. Okay? So it's something that it is new always. Now, so Bill Muja, as I told you, my golden subscription will not be available after the 4th of September, after the what we call the Labor Day. My subscription will be hidden. And just like this. Okay, so people, they go and they buy training, they will not have this big discount, which is golden subscription. Richard, thank you very much. Thank you. Flint, we're gonna say, why I can't use the same email that I use to purchase your regular lessons for the gold subscription? No. I think it's the same. It's the same thing. I don't know. They have a, because in all your account you will find everything that you buy. If you, for example, if you go to your library, whatever you buy, you find it there, subscription or whatever. I don't think there is a problem with the same email. So I have no idea about this. You can, Flint Wagner, you can send me an email and send me a screenshot, and I will try to see with the website developer what's going on. Okay, I will do that. But for me, it's always the same thing. They will never stop you from doing subscription because of it's the same. It's the same thing. Okay. Duna said, yes, Bill Muja, you say, no, I am not asking for more discount. But you say you ask you for a discount code. There is no discount code. Okay. Duna said, I sell short with a call option to protect my position. Now, what's the thing you are doing here? I'm telling you what you are doing. Duna, you should understand this. Let's say you are in North Carolina. You want to go to New York. It means you go to the north. How come you go to Florida in the south and you go to New York at the same time? You can't do that because you will stay where you are. If you sell short, what does it mean? It means you think that the direction in order to make money is in the south. It means the stock should go down to make money. But you buy a call. A call means that you think that the stock will go up. So you do two opposite positions. This will never help you. Even if you make money in one, you lose in one and you will be equal. Now, if you have made a trade that it is good like this, send it to me and I will explain what did happen and why. Okay? Duna, you have my email. Send me an email. Send me what you did. For example, how many shares you bought, when you bought it, how much you bought the call, and I will show you that you are wrong. And if you continue to do this, you will not go to make money because you want to cheat on the market. You want to make sure that you want to make money with whatever direction. This doesn't happen like this. And if someone tells you that you can make money, I challenge you. Send me the trade, and I will show you why. And if things happen oppositely, what it happened, how you can lose also. So this strategy is mixing two. It will never help. Okay, it will never help. When you go to fill out the information, they ask you, hey, Bill Muja, what's the thing they ask you? Please, can you please send me an email explaining what you, because this is something very, very special. So I don't know what you are talking about. So Bill Muja, please send me a private email, send me a screenshot and explain to me what do you mean, because I have no idea what you are talking about. This is my email, this is my website. You said I had to use another email when I made the golden subscription. Now I will ask, next week I will ask if this happen always or no, or there is a problem. Send me your email and what you did, and I will see that. You say it did not accept me to use my old email on record already. I have no idea. I have no idea. I don't think that. So you should tell me what is the screenshot. What does it say to you? Send me a screenshot to understand. Okay. Because Flint Wagner, this is a private problem. I don't know. So you send me a screenshot and I will ask and I will tell you what's the problem. Okay. So as I told you before, this 4 or 5 weeks doesn't allow. Yes. Flink Warner, send me a screenshot to see what's going on. Doesn't allow or doesn't accept. Okay, just send me an email, screenshot, I will see it. Put your old email and show me by screenshot what did happen, and I will send it to them. Or I can send you their email and you can ask them directly, whatever you want. Okay. So as I told you before, my golden subscription will not be available after the 4th of September. And I have given a lot of discounts for my training. So all you guys, if people are interested, you can just go to check my website and you do whatever you want. Now, this 4 or 5 weeks, I am interested into ETFs, sectors and industries, and a lot of people, they told me, you have not spoken too much about this in your channel, but I did speak too much, but I didn't give you too much information about that. Okay? Because there are some information I will not give like in YouTube. Some information I give only for the golden subscribers or silver subscribers when they ask. Because golden subscriber, you can ask any question from my 20 training levels. You can ask any question and I make videos. If something that you don't really understand and you need more detailed information, I will give you those information into videos and I upload them. Okay? Thank you, Bill Muja. Thank you very much. And as I told you before, we are now in the Labor Day, like a few days, and the weekend. I know a lot of people are busy and they are preparing for their weekend, and some people they travel, some people they have friends, so you will be so but my subscription is always I make videos in the weekend. So whenever you see the videos, the lessons and the videos and the weekly chart, the weekly search, you just go with the thing. And on Tuesday the market starts. It's a holiday on the, I think on the Labor Day. The market, I think it will be closed. So we will be looking at the next week thing. If next week is so good, we can end this correction, because the whole market is doing so good. There are a lot of sectors doing so good. a lot of industries. At the exception, there are some sectors that are doing bad. Some stocks are doing bad. It's always like this. The market is always like this. So if you have more questions, please always ask. We are in 2 hours and 5 minutes. So maybe we will end this session in few minutes. So please, if you have questions, just always ask and let me know if you have questions. So and for Bill Muja or Moya and Flint Wagner, you can send me an email. I will do check what's going on. And thank you very much, Duna, for coming and for asking the questions. And send me your trade about the selling short and the thing. I will took. How are you, Chris de Guzman? Where are you, man? You just listen. Why you don't ask questions? I haven't seen you for a long time. You are always hidden, so you should ask questions. Thank you very much, Chris de Guzman, for coming, and thank you very much for all you guys. If, for example, you have questions, and you can reach me by email as always, and I most of the time I answer questions. One day or two I answer all the questions. Oh, you have prepared some questions and send them to me. When? It means tonight when I'm doing the thing. I didn't see them. Oh, after this coming holiday. Okay. Just ask any questions. You have the email. Just prepare them, and I will be happy to answer you. Okay. So thank you very much for asking questions. Thank you very much for attending this session. Hope to have another session next week. And thank you very much. And try always to watch my videos, because I always daily make videos. Sometimes I give you information. Sometimes some people are following me too much on YouTube, and others they don't, because they don't watch that much. Okay. Thank you very much, and see you next week.